Yet another benefit that comes from these standard deviation bands being available to us by virtue of the fast and medium speed oscillators here in the component 4 line occurs when the opposite SD is violated. Here we're looking to identify locations where the primary short-term thrust in the trend direction might be at some sort of a degree that a pause or reversal could potentially occur. For instance, in this bullish scenario, the slow oscillator is above zero, and the fast and medium speed oscillators may have advanced to a degree where one or both of them may have violated their respective upper standard deviation bands in the case of a bullish case, which was true here. Now, of course, the pause did not last long, and the market just continued up. Ultimately, you did get into this topping area. Again, you exceeded the upper band here. You pull back a little bit. All that was the 1 bar penetration back on the triple STX, and then finally you rose into the ultimate top. So you had tops occurring at upper standard deviation bands by virtue of both the fast and the medium speed oscillators. By the same token, and the reverse condition, as you come down here, notice that the slowest oscillator is crossed below zero. We now have a trend direction move by the fast and medium speed oscillators that are below their lower standard deviation band, indicating this market may be set up for a bit of a pause against the newly established bearish trend. And, of course, that is exactly what happened. What it proved to be was a 1 bar penetration of both the regular and slow STX lines at that top. And once again, we came into a conjunction which will be discussed later. Same scenario down here into this bottoming process, fast and medium speed below their respective lower standard deviation in the direction of the trend. Expect a pause, a reversal. Same scenario in here, and that sets the stage ultimately for the at least short-term reversal of trend by virtue of the fact that basically the fast and medium speed oscillators move back above the slow at this point. So, just to recap this idea of trend direction, standard deviation band violations, these are places where we might anticipate the primary thrust to pause or potentially even reverse, and we'd be monitoring other tools as well. Also note that since we're talking about a price movement in the direction of the trend, the underlying forces may be strong enough that the fast or medium lines achieve overbought or oversold, but the market simply continues higher or lower, ignoring the messages from the oscillators. That can and does happen, by the way. Most likely, this is simply due to the force of the underlying trend, which is the kind of thing we would most probably be capable of picking up by doing some higher time frame analysis. Now, before leaving this discussion of the standard deviation bands and going through a lot of examples of this fan formation and standard deviation bands themselves, let's briefly discuss one more event that can take place by virtue of having both standard deviation bands available to us, and that is standard deviation band pinches. At times, the standard deviation bands may begin to contract towards one another, and here is a very good example of it right here. We have the fast oscillator here, shown in the greenish color, its upper and lower standard deviation bands here, and noted at points like this right here, the bands had been very wide, and yet they have narrowed considerably. This is not a classic ideal pinch, though we will find some of those later. But this is what I mean by a standard deviation band pinch, when they contract towards one another, giving that pinched appearance. In this scenario, we might expect that the market is potentially setting itself up for a larger and or more volatile move. The direction of that possible move would be determined by watching the actions of the fast oscillator as it either fans out or crosses the other two oscillators. In this case, it has already crossed from below to above. This pullback right here, yes, it brought the fast below the slow, but the medium speed still held its bullish position, and now the band pinch occurred, basically telling us to expect this market to most likely head back to the upside here. Of course, many other ocean tools that we are accustomed to using would also be bearing down on this particular formation and offering a pretty good sense of the anticipated direction of the move as well. Okay, having a sense of the way the fan operates, I think the way I'd like to approach this is just to talk about one of the other primary formations that comes from the component 4 line, and then we'll go through a myriad of chart examples to try to reinforce what these patterns look like. Basically, just as we had discussed in the triple STX with shadow study, we're talking here about conjunctions. Anytime we are discussing the component 4 line, we're always capable of finding these locations where conjunctions are occurring. That is, points where two or more of the oscillators come into a point of singularity or near singularity, as was the case here, and was true here, and was true here as well. These can help pinpoint locations where reactions to the trend, note I said reactions to the trend, are likely to terminate. Due to its speed, the most likely conjunction will occur as the fast line comes in proximity to either the medium or slow line. These locations would typically be used to identify very swift yet shallow retracements against the primary trend. And here's the kind of thing that I'm talking about right here. Your fastest to respond, of course, is going to be the fast line. It comes back into proximity to the medium speed line. Under a scenario of a very deep retracement, by the way, here would be its bearish equivalent, and under a deeper reaction scenario, you could see the fast line come all the way down to the slow line itself, which was basically what happened here in this triple conjunction. Another possibility is that the retracement is deep enough or is of long enough duration to force not only the fast line but also the medium speed line into a conjunction with the slow line, which was the case here. That happened to be a fairly deep retracement, not of great duration of time, but fairly deep. Here was a retracement that was of a significant time element, but not a lot of reactionary price movement, yet it still managed to bring the medium speed line back into the singularity or conjunction with the slow line. In this case, it's also very possible that you can see overshoots of the fast line, that is, the fast line reacting enough to where it overshoots either the medium or slow line and possibly even reaches the zero line and or its standard deviation band. In this case, it did hit the standard deviation band, but not the zero line. There would be plenty of instances that we will come across where in a reaction like this, the fast overshoots them both, and yet you've got the conjunction taking place by virtue of the medium speed and the slow. And even some of these retracements could briefly send the medium speed line to its standard deviation or to the zero line as well. The point is here, generally as long as we monitor the position of the slow line relative to the zero line, that is above zero for a bullish climate and below zero for a bearish climate, the trend should be considered basically intact and any overshoots should quickly resolve. Again, we're discussing a single ocean tool in isolation here, and many other available ocean indicators would likely to be offering us a clarifying message in those cases where any ambiguity might exist. One last point pertaining to these three oscillators before we get into looking at a lot of chart examples is that the slope or degree of angularity of the oscillators might also be offering us a telling message as well. The sharper the angle of the oscillator, that is, pointed nearly straight down in this case by the fast oscillator, or nearly straight up in this case by the fast oscillator. In fact, even the medium speed has a very sharp angle of attack right here to the upside. But what you can generally consider is that the sharper the angle of the oscillation, the stronger the momentum of the directional move. Remember that the math of the oscillators will dictate generally that the fast will produce the greatest angularity, simply because it'll be the fastest, followed by the medium speed line, and then of course the slow line. Note that it's very rare to see a lot of angularity, though it can at times happen, but a lot of angularity coming from the slow line itself. In the case of a grinding trend, by the way, such as the recent U.S. stock indices exhibited here in the first 4.5 months of this year, the elements of the component 4 line can basically go flat, and we'll see some examples as we go forward. Yet the relative fan position of them has remained generally bullish in that particular case of the equity markets, as the fast has remained above the medium, which in turn has remained above the slow, while it too remained positioned above the zero line. We'll see plenty of examples of this. But the main thing is to look at the angularity indicative of what's happening to momentum, and that as the angularity begins to wane, what we're probably dealing with there is a market that's more in a grinding trend type of environment. Okay, let's turn our attention to some chart examples now that basically reinforce these primary lessons that we've seen here on just this simple weekly chart of sugar.